Fellow traders, 'tis I, TheRumpledOne, coming to you on Friday, May the 23rd. The year's 2025. Let's talk trading. Weekly wrap-up. These videos are for educational purposes only. Your results may differ from mine. And as we end the week, as usual, I will remind you about risk management. Never lose more than you're willing to lose on any one single trade or during any one single trading session. So for the week, we can see we are 257 pips above the weekly open for the pound, 12 off the high, 256 off the low. And I look at the dashboard shows we have 6 pairs that did not fill the gap. I think that's 2 weeks in a row. Gaps weren't filling. That should tell us something. Something's changing in the market. And a quick look at the monthly. We can see we are 197 pips above the monthly open, 15 off the high, 380 off the low. And we are above the previous month's high, and we definitely expanded the range for the year. Looking at the daily, we are above the opening range for the month. We are above the opening range for the week. And for the year, we are 1,011 pips above the yearly open, 11 off that yearly high, and 1,423 off the low. We're going back to that 35-25 psychological level, looks like. Be a test there. Yesterday was an inside bar, and you can see traders trading inside bars would be up 77 pips at the moment. And not only did we break yesterday's high, and we also broke Wednesday's high. For the day, pound has 126 pips of range. It looks like the euro yen is leading in range with 167 pips. I guess what happened was Trump said something about putting tariffs on Europe, and it just spiked the currencies. And that was about an hour ago, I believe, that happened. Maybe it was 2 hours ago, but I think it caused all this volatility right here. And as you can see, we went through the buy zone during the Asian session and never looked back. Red rats, get ready to feast. So smart rats were short at 21, and normal rats still have a chance, with 35.14 being the last chance to get on the short boat. This looks like a return bar to me. So bias near R1 is short. Bambino Flex indicator said to look for short. We're now at R4. So it's probably a good area to go short. H4, we took out the pivot here. We still have a missed pivot way down at 34.25. For the daily, we took out today's pivot. For the week, we missed that pivot by 4 pips. and we've taken out the pivot for the month. So we've got 1 week of trading minus Monday. It's a holiday. Still plenty of time. In and out of the lower wick zone and out of the upper wick zone from yesterday's daily candle. You can see here 268 pips of range. Puts us at the 66th percentile. High minus previous high 173. Previous low minus low, a minus 126. So we have a higher low, higher high. For the rats, high minus close right now is 16. Close minus low is 251. For the weekly crossover traders, as you can see, there wasn't a crossover because open minus low was 0. So no crossover trade this week. That's a rare occurrence. And it looks like we're coming back down to the previous H1 high here. So that 25 would have paid off nicely, about 10 pips, 9 pips so far. That short. Even though you would have been trading against the M30 candle color. But look here, we had, and look at these percentiles. So lots of pips to be had. Past 4 30-minute candles. And we had a higher low trigger back at 135.30. The moment be worth 12 pips. Notice we came down, we hit a previous 3-ball high. So what would they say? Resistance turns into support. So you can see here, 3-ball, back up, almost hit it, way back down, new 3-ball, and then to the upside. And just looking at flip-flop boxes, you can see there was a nice one right here. And right here, there was a trade. Looks like this went down, then came up. Be worth about 4 pips right now. Looking left, you can see this is a congestion area. So take your 3 or 4 pips, be happy, and let somebody else battle it out. So range for the month is 329. We're definitely not the lowest. We're definitely not the highest. Let's take a look and see what that ATR percent will be for the month. We're at 86% right now. Let's check the year-to-date accumulated range. We've pushed it up 90 pips. So we're nowhere near the high, but we're well above the low. It looks like the low was last year. And let's take a look. Close minus the year-to-date open percentage, 8.06. I remember the last time we looked, this was under April. So if you were riding it, be up 8% on your money, which is not a bad return from the investment profile standpoint. And let's see what the ATR is. 459. So we have some pips before we can hit that 100% level. Taking a look here, let's zoom out to the month. Price above upper wick zone, buyer strong control, higher high, higher low. Drop down to the weekly. Price above the upper wick zone. Notice here, 1, 2, 3, 4. We just moved right above there. Buyer strong control, higher high, higher low. Drop down to the daily. Previous bar was an inside bar. We noticed that. Price above the upper wick zone. Higher high, higher low. Buyer strong control. So there was a flip-flop box happening right there. Actually had a gap down, came back up. You can see here it's putting in this range area. You draw a line, you see below this level's wicks. Above this level here, wicks. So that's how you define the range. And here we go, back down. Continuing down. H4 is turning red. Actually, let's take a look at that H4 chart again. Yeah. And let's see where that pivot point is. We're about 5 pips away. For it to take out that pivot. $35,085. Let's see what happens. Might establish a new range here. Looking left, you can see that's the 10 level right there. And then if you look left, you can see prices in those wicks. So does it pick up new buyers? Because you see here, the sellers pushed it through here, but will it pick up new buyers through this level? And it looks like we'll have to wait and see. New flip-flop box, the north trigger. So once again, this looks like 21 area might be a target. It needs to break above this high right here also. Otherwise, but once again, this is all wicks. That's pushing down.